Alright, this video will be on the economy again. I wanted to talk about covered calls. One thing I learned in the last week was something called a covered call. And a covered call is basically an options trading. But basically when you buy a stock, so whatever stock you buy, you are renting out your stock. I think that's the best way to explain it. So basically you buy a stock at, say, $50 per share, and there's a exercise strike price, and that'll be slightly higher than the price that you paid for the stock. So if the stock goes up, you make actually immediately the premium for the covered call, and you make the small appreciation on your stock. And then so basically when that happens, you basically cash out on your stock and the covered call. Now, I don't do covered calls myself, actually, but I just found that that would probably be a good idea for a lot of people. Another interesting fact is the dividend capture, which is buying a stock right before they distribute the dividend and then selling it right after. I think that's also a good idea. And let's see here. The stock market has been doing very, very well lately. As far as precious metals are concerned, some precious metals have been doing very well. Others have just been holding steady. So gold and silver has been kind of holding steady, and then palladium and platinum has been going up a slight bit. Now, I don't know which way the stock market is actually going. I don't know which way the stock market is heading. I don't know which way the housing market is heading. Some people say, if you ever watch the news, some people actually say that the housing prices will start heading back up by 2010. And some people say the stock market will see a slight rise this summer. So there's a lot of speculation out there. Like I said, if you just open a newspaper or you watch television, there's a lot of speculation, both on the upside and the downside. I myself invest in precious metals, and I myself invest in the foreign exchange, the forex market, and I myself invest in different commodities. So I don't really gamble that much at all. I actually gamble very little. There is, however, a very, very, very big profit potential in the stock market right now. But like going to a casino, it's all just a big gamble. You just never know. The only advice I could really set for sure is that the stock market is becoming very, very cyclical. Now, when I say cyclical, I know I've said the word cyclical probably a million times, but I'll say it one more time. In the old days, in the 40s and 50s and 60s, is when you put your money into the stock market, it gradually grows with the market. So it gradually grows and grows and grows, a very small percentage every year. So maybe 7 to 10% a year. And it just keeps going up and up and up. But these days, that's not the case. These days, we have an up and down market, which is also called a cyclical market. So is that good for the old conservative traders that just kind of put their money in stock and leave it there for the next decade or millennium? No, that's not good for them. But is it good for the day traders? Is it good for the people that keep an eye out for the daily fluctuations? Is it good for the people who are looking for a quick buck? Is it good for people who are gambling? Probably, because I think this is a market where you have to, when you buy low, you have to take your profits if it goes up, because eventually it'll go back down again. And so I think that's the ultimate crux in the stock market. I think that's the ultimate flaw in the stock market, is not that it is cyclical, but the number one flaw that I see in the stock market, options trading, and just everything in the financial sector, is that that there's no real base for the stocks. So basically, you just don't know if it's going up or down, and basically, it is going up and down all the time. So you just don't know. Some people say that with the the few $1 trillion that the government has infused into the markets, that this will create an artificial, and I emphasize that word, artificial, increase in the amount of capital that's out there. So what this will cause is an artificial bump in the stock market. So this has happened in Weimar Germany, the Weimar Republic. So remember that word, Weimar Republic. What happened was Germany, when they had their financial crisis, similar to today. This was before Nazi Germany. This was way before Nazi Germany. What the German people did back then was print lots of money. They just printed a whole hell of a lot of money, which is worthless. And what that did was it sparked a temporary artificial upswing, economic recovery. That's what it did. It created a temporary upswing. It created a temporary bubble, and a temporary recovery in the economy. So they actually did very well for, maybe I would say, based on history, they did okay for about the next 4 years, and they did especially well within the year. So I encourage people to watch out for that, because if the stock market, or if certain markets do go up quite a bit, then they definitely want to be in there for the ride, of course. Now, they have to be careful, of course, for the downswing in the cyclical markets. But if you look back at Weimar Germany, the Weimar Republic, you'll see an example that almost mirrors what's happening today. Now, after this temporary artificial bubble collapses, then it's going to be real horrible, financially wise, for all the markets. Because what happened in Weimar Germany in hyperinflation, remember that word, hyperinflation, after the party was over, what happened was Germany sunk into probably the worst depression in human history. And that instilled the Nazis into power. And so history lesson to be learned, Weimar Germany, and hyperinflation before the Nazis took power. And I think for investors, this can be a real chance to seek out profitable investments and profitable businesses to make some profits. And but I think this will be temporary, and I think for sure this will be artificial. This will be temporary and artificial. So this summer there may be a bump, but afterwards there may be a huge crash like nothing in history. It will definitely rival Weimar Germany and hyperinflation, but I think it will actually surpass Weimar Republic. I think it'll be worse than the Weimar Republic and the hyperinflation that they have experienced. I think it'll be I'd say about 10 times as worse.